Hello. Yeah. Good evening, everyone. So at the outset, I would like to thank Jitendra ji for. Also, would like to thank WIRC and FRRB for the opportunity to present views on. So the session is going to be in two parts. Basically, first few slides will be on standards on auditing. The next few slides will be on CARO. There would be certain specified clauses. So usually at the beginning of the session, any session, we have that the views presented are of an individual and institute, WRC should not be held responsible, etc. But since we are today at FRRB's program, so there has to be certain protocols that need to be followed. So it's going to be a reverse disclaimer that these all are the observations from the point of view of FRRB and whatever reviews they have made. And this is nothing but the summary of various non-compliances which FRRB has observed over the years after having reviews of various financial statements, audit reports, etc. And based on that, this entire presentation. So we'll be strictly abide by the presentation and the slides, and will not be going away from that. So with that, we shall start the today's session. So as I mentioned, the first few slides will be on observations relating to standards on auditing. So as we all know, I mean, FRRB's main role review the financial statements and thereby point out certain significant deficiencies that they have come across over their reviews. Accordingly, they have compiled over the years certain compilations on their non-compliances which have been observed so far as application of audit standards are concerned, as well as the application and reporting in CARO is concerned. So based on that, we shall commence the session. First is about SA 250, that is consideration of laws and regulations in an audit of financial statements. So the observation was as follows. So there were instances of non-compliances with various laws and regulations, including Companies Act, the Companies Accounting Standards, the Indian Accounting Standard Rules, Division 2, Schedule 3, etc. And with respect to that, obviously the paragraph 10 of SA 250, which in fact speaks about auditor to design and prepare its audit plan regarding look into the actual non-compliances with laws, also the suspected non-compliances of those laws and regulations. So with respect to that, such sort of observation indicates that auditor actually did not perform the required audit procedures to identify entities non-compliances with laws and regulation, and thus failing to achieve the objectives outlined in paragraph 10. So the general observation was there were many non-compliances. So this is basically the general non-compliance. So there could be various things which might have been missed from reporting in various financial statements. So far as Indian Accounting Standard Rules or even the Division 2 Schedule 3 things were concerned. And by that, there was no specific remark, maybe an audit report, there may not be reported in audit report. And so this observation is coming up. So this is the first observation which has been, grouped under SA 250, that is laws and regulation. Moving on to next is 505, which is external confirmations. So usually, FRRB has observed in some of the cases that a note regarding MSME, is put into the financial statements. And note is usually like this, that this has been relied upon by the auditors. Now, technically, so far as MSME is concerned, we as auditors will have to actually get into the the masters of vendor masters of in case of SAP or in case of other vendors or in case of other accounting software. So we have to actually get into the the capturing of data so far as those creditors or those MSME vendors are concerned. In that case, we actually perform certain audit procedures. It is expected to have you actually look into the MSME status of that particular enterprise. Based on that, whatever the payment methodology is set, that needs to be vouched and verified. But a note like this gives an impression that auditor has not performed or has merely relied upon the management representation, and so it in fact fails paragraphs 5, 12, and 13 of SA 505. So basically, the given disclosure indicates that auditor has merely relied upon the information provided by the management without applying any specific audit procedures to verify the information in line with requirements of respective paragraphs. if the auditor has performed requisite audit procedures to satisfy himself, then auditor should have insisted or on not bringing such phrases in financial statement. So even in the previous session of Rajesh sir, there was a common phraseology that generally it is said so. So that generally thing needs to be now more specified, is what the entire crux of this session. So wherever we put such notes, it needs to be understood, and it needs to be looked into in specific manner, that wherever we have performed such audit procedure, we should not unnecessarily put terms as this has been relied upon by the manager, by the auditors, or as informed to us by the management, etc. The next essay is 550, which is related parties. So obviously we all know, so far as related party transactions is concerned, regulators are really taking strict views on that, provisions, as well as there are any audit procedures that one needs to be followed, because that is the one area where the fraud risk could be the maximum. And so there has to be specific audit procedures to be performed with respect to identification of those related parties, their amounts, their approvals, their arm's length price, right? So based on that, we need to actually prepare our audit opinion, and so shall we put in our audit reports. However, in one of the footnotes to the disclosure to related party transaction, FRRB observed that related party relationship and transactions thereof certified by the company and relied upon by the auditor. So it is again in the similar way as that of the previous slide. So where the auditor has put, or maybe in the notes to accounts, it is simply put as a note that it is relied upon by the auditors. And so it in fact indicates that auditor has not actually performed its duties, right? And therefore paragraph 9 and 15 of SA 550 are failed. So the observation was, the given disclosure indicates the auditor has not carried out adequate procedures. Instead of just relying on the management assertions, auditor must satisfy himself existence of related parties, their relationships, transactions with them, the balances that are appearing. Maybe here one can think of actually obtaining balance confirmations, even though those are related parties, right? As we usually do in case of, say, banks, investments, borrowing. Even in this case, one needs to actually look into the point of obtaining related party transaction balances, because it may so happen that there are two different companies, and two companies are both, say, for example, are listed entities. Then it should not so happen that one listed entity is given balance X, the other is giving balance Y. That may be possible, but at least in that case, you should have the reconciliations of it, because unless, yes, sir. Yeah. Yeah. Okay. So the related party disclosure is to be given as on date of the balance sheet. So far as there are no transactions, as it is not a related party during the year or on the date of financial statement, that is fine. So far as it is not a related party on the date, because you give balances as on date. So even though that balance is there, but if that party is not a related party on the given date, need not be disclosed. Yeah. Okay. So that was the point with respect to related parties. Moving on to SS 700. So we all know that series of 700, the SS 700 and onwards, is about the reporting standards, right? We have to be very careful as to what we actually report. Now, in this particular case, in auditor's report, under the heading auditor's responsibilities for the audit of the financial statements, some incomplete reporting was done by one of the audit. So the requirements of paragraphs 38, 39 specifically gives an illustrative format. Also, there is appendix. SS 700 has also given illustrative formats of different areas, or maybe different situations where audit report needs to be worded in appropriate manner. In the given case, auditor has not expressed an opinion on the adequacy of internal financial control systems of the entity, the appropriateness of accounting policies, appropriateness of management's use of going concern, and the overall presentation and structure and content of financial statements as required in paragraph. So this is basically, I would say, a very gross sort of an observation, or a miss by that auditor, that reporting under auditor's responsibility paragraph was incomplete. Another case, again, that is related to SS 700. So this is with respect to opinion paragraph. So the auditors reporting under the opinion paragraph and report on other legal and regulatory requirements included reference of statement of changes in equity, where financial statements were prepared under IGAP, right? So I need not say much on that. Now we all know, so far as IGAPs are concerned, obviously statement of changes in equity is not part of financial statement so far as IGAP is concerned, right? Under that framework, there is no statement of changes in equity. But it was mentioned in auditors report. So obviously it's again one of the gross misses. Probably here we may have to be very careful so far as copy pasting of audit reports are concerned. So again, a thing which is generally missed by the staff of report is prepared by certain standard audit report which is prepared maybe for listed entity or which is prepared for Ind AS entities. And from there, if you copy it as it is, you may have such sort of. Moving on to SS 701, that is basically regarding communication of key audit matters. Now, this is very peculiar thing. So we all know that key audit matters need to be included. We have to describe what the key audit matter is. We have to say why it is a key audit matter. That emphasis, needs to be made in that paragraph. Why is it key audit matter? What sort of judgment is involved in that? On the right hand side paragraph, you have to write down the entire audit procedure as to what did we do to, in response to that particular key audit matter, etc. But what if there is no key audit matter in your entire audit? Then what to do? Then there is a specific paragraph in the sense, even if that key audit matter is not there, then that fact needs to be brought to the attention of readers of financial statement. So this is the peculiar case where the independent auditors report did not include the reporting of KAM, that is key audit matter. So the observation was, if the auditor determines that there are no key audit matters to be communicated, then this fact needs to be reported in the auditor's report in line with the requirement of para 60.1, right, with, question 26 in implementation guide. So here, since we are on that topic of implementation guide to SA 701, what would be the best approach is, we should first of all know what is the literature that is available so far as standards on auditing and the CARO and other reporting requirements are concerned. So we generally know about only the standards on auditing. But I would request you, all of you, to simply go to the website under resources. There are many implementation guides available for specific standards on auditing. This implementation guide actually give the practical scenarios and approaches that one needs to follow in case of a particular standard. It also comes up with various questions. So you can find many FAQs. Those FAQs could be very helpful in training your staff members or maybe training your managerial level persons, because it actually gives you that practical perspective as to what needs to be done in a particular case so far as compliance. So here the FRRB has also given that reference, that question 26 of implementation guide 1. So one needs to clearly mention that if there is no key audit matter, then that fact needs to be brought to attention. This is SS 705, which is modifications to the opinion in independent auditors report. So far as modification concerned, there are qualified report, adverse report, and then the disclaimer. So in one of the auditors report, it was so observed that the audit opinion was modified. However, in the auditor's responsibility paragraph, the line used was as follows: that we believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion on the financial statement. So here the specific reference to maybe qualified or adverse audit opinion was not mentioned. So this is again a very, what I can say, a very, very minor point if you see from the overall perspective. But these are the points which may set a tone to the readers of financial statements, and hence it is necessary and important. And so it must have been brought by FRRB that in place of the simply writing audit opinion, the auditor should have used the word qualified or adverse as may be appropriate. Okay. Moving on to next essay, that is essay 706, which is emphasis of matter. So EOM. So can I have a general question in the sense, where do we give EOM, or what is the prerequisite to give an EOM? Yeah, anyone? right? 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 I mean, this is 80% correct. But a little one additional point is left. Yes, ma'am, please. Exactly. So the disclosure of that matter in financial statements by way of notes is sort of a prerequisite to give EUM. So whenever we are giving EUM paragraph, it starts with the words maybe your attention is drawn to the note so and so, and then why that is an emphasis and EUM paragraph, right? So in the given case, FRRB observed that there was no reference of matter in financial statements for which emphasis of matter paragraph has been provided. So emphasis of matter paragraph shall refer only to information presented or disclosed in the financial statements. However, in the given case, the various matters contained therein do not have the reference in the financial statements. Further, in certain cases, under emphasis of matter paragraph, the auditor has not stated that his opinion is not modified in respect of the matter emphasis. So, what's the problem is, if you give emphasis of matter on a certain thing which has not been disclosed in financial statements, again, it may create a doubt in minds of readers of financial statement or auditor report whether auditor wanted to qualify or modify his opinion but has just given EOM, or he simply wants to give EOM. So to avoid that, it is necessary to have a clear-cut reference to the notes to financial statement or whatever the disclosure that you are pointing out in EOM paragraph, and there has to be that concluding remark at the end that your opinion is not modified with respect to that particular EOM, right? Moving on to next essay, that is essay 710, that is comparative information, figures and comparative financial statements. So here the other matter paragraph, the other matter section in auditor's report has not been reported, although auditor for the current year and previous year were different. Again, this is very important because when you give opinion on financial statements, obviously that financial statement, the face of balance sheet, P&L, your statement of changes in equity or other notes, they all carry corresponding numbers. So it is not that you are simply giving opinion on the current matters in the years column in your financial statements. You're giving your opinion on the entire set of financial statement, which includes the paragraph, which includes a column which is audited by other auditors. And that fact needs to be brought to the attention. So the other matter paragraph in terms of para 13 of SA 710 has not been reported by the auditor in that case, where the auditors for the previous year were different. So the observation, or maybe, the point to be noted by all of us is that wherever we are taking any new audit assignment, in that case we have to be very cautious and careful while drafting our audit report, and we should ensure that that other matter paragraph is included in your first audit report, because obviously your previous auditors are different, right? Okay, next the SS 720. Again, this topic was brushed in our previous session also, where Rajesh Modi sir explained about that board's report and the other information. So in one of the cases, it was observed that the information other than financial statements and auditors report thereon was reported as follows. So the company's board of directors is responsible for the other information. The other information comprises the information included in the management discussion and analysis board's report and report on corporate governance and business responsibility report, but does not include the standalone financial statement and our auditor's report thereon. Now, in this case, the observation was the business responsibility report mentioned under other information was not annexed to the annual report. So the points which we were mentioning in that other matter paragraph, other information paragraph, that needs to be, actually vouched, that needs to be actually seen. And therefore that at least draft board report needs to be obtained while we are signing off the balance sheet or report. Because in this case, that business responsibility report was not included or was not annexed to the annual report. However, auditor just pointed out that, these things are included in other information. However, auditor's report and finance. So these things may happen in case, where you are doing maybe the copy pasting of other audit reports or other information paragraphs of other audit reports. So that care needs to be taken that you actually ensure as to what is included in that board's report, what is included in that other information, and you should be actually pointing out that rather than simply copying or taking. We shall move to observations related to company's auditor's report order 2020. Again, in this of observations, FRRB has covered only the 13 clauses, up to 13 clauses of CARO. We shall go through it. If at all there are any other observations, we shall see it later. Okay, the first clause. The first clause is about PP, right? So in case of clause 3.1a of CARO, so following are some of the cases where auditor has reported in very casual manner. So the overall, I'll just give you a gist before we get into these CARO observations. See, you all must have seen, and that might have case in most of the earlier CARO reports, that all observations in those CARO clauses, it usually starts with a word that as informed to us by management and etc. These things where you put that as informed to us by the management, it indicates or it implies that somewhere we as auditors have not adequately performed our audit procedures. It may give an indication, although we might have performed all our audit procedures as are required under any clauses or under any standards or not. But when we mention so, it gives an impression that maybe a layman reader might feel that, okay, auditor has simply relied on what management has provided to him or her. So to avoid that, these general clauses or maybe the general words or the casual approach, that needs to be changed, and auditors should be putting specific opinion. So what is exactly required to be mentioned under that clause, should come up with his own language and own clear wording, so to indicate that, okay, I have performed these audit procedures, and based on audit procedures or based on audit conclusions, so and so is the observation. So that is the general crux of all these observations. So as we go along, going through these slides, you will realize and understand that most of the observations would revolve around this central idea. Okay, so in the given case, the company, the casual reporting was as under: the company has maintained reasonable record showing full particulars, including quantitative details and situation of property, plant, equipment. Now, in this first case, the auditor's comment does not clearly mention whether proper records were maintained or not. Now, again, what is proper records? For that, you need to actually look into the guidance note on CARO. It has given a long commentary on what can be considered as proper records, right? It includes many things. So proper records would even start from your title deeds, the way in which the quantitative aspects are concerned, the location is concerned, and n number of things are mentioned. Just that we need to look into it. Since the words used by the auditor in his remarks were reasonable records, and the requirement was to mention whether proper records are maintained or not. So there is a dichotomy between what is asked for and what is given in audit report. And so was the observation. The second point was the company generally maintained, again, the word generally, the generally maintained proper records showing full particulars, including quantitative details and situation of PPE. So when we say that company generally maintained proper records, it may sound or it may give an idea to the reader that in all cases, it may not be possible in all cases that company has maintained proper records. So generally would mean maybe what 85 to 90% or maybe 95%, but not 100%. So to avoid that sort of an impression to the readers, one needs to be very precise, and so is the observation. So you can see that in second case, the usage of word generally gives an impression that there might be instances where proper records of PPE have not been maintained. So basically, you are maybe knowingly or unknowingly or inadvertently, you are giving that small bit of room, to interpret what you want to say in your auditor's report, and that room may create different colors to the reader's mind. So that should be avoided, is what the the FRRB clause 3.1b of CARO, again related to PP. So, various instances were observed in their review where auditors have reported in pursuance to clause 3(1)(b) in following manner. So the typical observations were on left hand side. So we'll just go through that. So as explained to us, the PP are physically verified, or we are informed that no material discrepancies were observed, or maybe it may be used that we have been informed that no material discrepancies were noticed in such verification. So, or according to information and explanations given to us, right? Or maybe as informed to us, again, the PPE has been physically verified. So these observations, or whenever you mention, so in case of your CARO reporting, that as explained to us, or we were informed, or we have been informed. So it gives an impression to the readers that what has auditor done in that case? Has he performed his duties or not? That's the whole observation is about. So if you if you read the right hand side part, the use of words such as we are, or we have been informed, or as informed to us, etc., indicates that auditor has not carried out adequate procedures to confirm whether actual verification was done or not, and also whether the discrepancy found, if any, is material or not. So basically, it is on us to say whether any material discrepancy was observed in case of that physical verification, or we have to be pretty precise when we are saying that management has a specific plan for doing their physical verification at least once in 3 years, or whatever the plan is. So that needs to be brought to the reader's attention very precisely, and whenever that is missed, FRRB is quite uh, strict about it needs to be brought to the attention in the right manner, and it should not give any ambiguity, right? So moving on to clause 2, that is with respect to inventory. So it is also on the similar lines as that of PP. So various instances were observed where auditors have reported in following manner that inventories have been physically verified by the management, and according to information explanation given to us, no discrepancies were noticed. Or it may it was also observed that inventory verification was done at a reasonable intervals during the year, wherever possible and required. So again, these words, even while reading these words now, we ourselves are doubting whether that auditor has performed his duties or not. So one can imagine what impact it would make on financial statements readers, right? So in first case, auditor has not reported whether physical verification was done at reasonable intervals, or in second case, the phrase wherever possible and required is not appropriate, to create ambiguity in the minds of reader, and so that CARO reporting is not up to the mark. So yes, sir. Yes. No, in that case, see, there is a specific requirement for us to, no, not necessarily 100%, but at least you should not give color to the overall audit procedures that it is entirely done by the management. Because CARO has specifically asked about certain specific things, right? CARO has asked whether management has conducted at physical verification at reasonable intervals. Now, what is reasonable intervals? That commentary is given. So we should be simply saying that if we have actually performed the procedure, we should be saying that, okay, that management has actually conducted physical verification at reasonable intervals. But if we add any prefix to it, or add any suffix to it, or give any, sort of a disclaimer clause to it, that is where we are trying to dilute, or maybe trying to find an escape way, if at all something is left out, to ye dal denge to acha rahega. So that is where the point would case. Yeah. Yes. Yeah. So that is fine. That obviously, whenever we do audit, it is what I can say, basic standard go to question, in the sense it's like a standard thing that all information will be provided to us by the management. So nothing specifically mentioned about it, in the sense we are not doing investigation as such, we are performing the audit, and so far as that audit is concerned, the inherent basic requirement is that management should provide us that information to us. So whenever we are mentioning it very precisely in each and every paragraph, that as informed to us by the management, it may give that impression that we haven't performed anything. This is again what the point is, that is the view is. So in case of certain specific items, say maybe in case of provisions, or maybe in case of estimates, right, where we actually need to rely on management's judgment, again with respect to that, as we were mentioning in previous session of Rajesh sir, say in case of actuaries, right, actuarial valuation, we have to actually test the assumptions. although that is a provision, we simply cannot say that based on what management has provided us, we are giving this provision as appropriate, right? There also we have to test what assumptions have been used, because it may so happen that actual, say, increment rate is say 12%, but in actual assumptions you have just given 4%. Then at least that question needs to be asked by us. Or it may so happen in case of say physical verification of inventory, right? In most of the cases, you may find many lacunas in overall conduct of material movement at a respective plant. Now there are standards provided. So I say 260, 265 are the standards actually make communication to those charged with governance. So the point here is, to what extent do we actually make use of those standards, and how do we communicate, and how do we demonstrate that we had communicated this? That is something which would add to the overall audit quality, right? And thereafter maybe one can modify the words of these CARO paragraphs, and rather than simply starting from the words as informed to us by the management, then maybe we can say it with authority that okay, this is what the fact is. Despite that, wherever it is necessary to bring to the attention that okay, this is predominantly given by the management, however we perform these things, maybe it can be suitably modified, but it should not be simply used as if everything is just simply provided by the management and we have relied upon. Yeah. So okay, so moving on to clause 3. So again, a similar sort of observation was there. According to information given to us, borrowers have been regular in the repayment of principals and interest on loans as stipulated. I mean, in this very example, you can actually see the reporting was, according to the information given to us, the borrowers have been regular in the repayment of principals and interest on loans as stipulated. Now, do we really need to say and state that according to information given to us? Because this is something which we can actually do, the audit procedures we can perform on this. We can actually look into the bank statements, we can actually take balance confirmations, we can take repayment schedules, and n number of other things that we can do about this. Despite that, it is simply mentioned that according to information given to us borrowers, in this case, even that auditor might have performed these things. I'm not saying that he might not have. He might have performed also these things. But the reporting is coming out in such a way that it gives an impression to the readers that he has not performed anything. So that should be avoided, is what the crux is. So the observation was, according to information, may lead users of financial statements to believe that auditor has merely relied on information, and so on. This is what we have been discussing so long. Okay, the clause 3(4) of CARO, right? Subclause 4. So that is basically regarding section 185, 186, right? So the left-hand part are again all the observations. I mean, are all the cases which FRRB has observed. So here the company has complied with say provisions of section 185, 186 in respect of making investment. Now the observation was, auditor has not reported on compliance of 185 and 186 in respect of loans given, guarantee, and securities. I mean, if you read the left hand part of it, it is specifically mentioning about the making of investments. But if you read the clause, it asks you to give your opinion, or to report on 4 things, right? That is loans given, guarantees, investments, and securities. We generally call it as GLIS. Apparently, I mean, while we were doing, I mean, when I was doing one of the clients, so client's short form was appearing to be GLIS. So this clause was very easy for me to understand. So I thought maybe to share with you that GLIS is basically the guarantees, loans given, investment, and securities. So these 4 things are basically asked to be reported upon. But in this case, our auditor friend has simply said about investments. So again, it is not a complete reporting so far as that clause is concerned. The second observation was, company has not made any loans, guarantees, or security to person covered under 185. Therefore, requirement of 185 is not applicable. Now, if a company has not performed a particular thing, which had it performed, the clause would have been applicable. So here you cannot say that clause is not applicable or the section is not applicable. The section was obviously applicable. Maybe reporting under that clause is not applicable, right? So the relevant notes, I mean, in this case, so it is altogether gross thing, that in the relevant notes, those notes show that company had given loans to directors, and auditors reporting obviously was this, that no loans were given, and so the section was not applicable. So this is, I mean, an avoidable error, I would say. but was not avoided, and so it was wrongly reported in that audit report, and so FRRB picked up as an observation. The next one is auditor reported that requirement of 186 has been complied with. However, company has provided interest-free loan to holding company. Now, if you refer to 186, it speaks about loans given by holding company to subsidiary. It's not vice versa, right? The auditor's reporting contradicts with the facts presented in financial statements. So again, I mean, when your financial statements are giving a clear disclosures about a particular fact, at least those facts you should not be missing while reporting in your CARO report. Then the last one is very peculiar. That is with respect to infrastructure companies. So 186 subsection 11 is something which is exempt. However, section 186 subsection 1 is still applicable to infrastructure companies. But generally, it is so mentioned that being infrastructure company, provisions of section 186 of the Act is not applicable, which is not the correct thing. So 186 subsection 1 is still applicable to infrastructure companies, and compliance with respect to that particular subsection at least needs to be given with certainty. Okay. And then we are moving to fifth clause, that is with respect to deposits. So the observation was as follows: the company has not accepted deposit. I mean, this is what has been reported. So the company has not accepted deposits from public under the directives issued by RBI and provisions of 73 to 76 and rules framed thereunder. However, temporary loans have been taken from employee welfare trust without adequate records. Now, when we are saying this in CARO, even though that is just maybe one line taken together, that gives an impression that this is a significant matter, that company, if at all it takes any deposit, it needs to adhere with those rules and section 73, 76, etc. However, when we say that temporary loans have been taken from employees welfare trust without adequate records, if we simply say so in our CARO, you just imagine what would be the impression while reading that particular financial statement. So the observation was, if those temporary loans fall within the purview of 73 to 76, they should have been clearly reported. If those loans fall outside the scope and auditor still wishes to draw reader's attention, that it obviously be from the point of view of, or it should be through your emphasis of matter paragraph. You simply cannot say, just a passing remark that no other loans or no deposits, but there are few loans without having adequate record. So you simply cannot say so, right? Because it is not giving a clear picture as to what you want to say. Are you, drawing attention to any significant matter, or you're simply giving a clear opinion that under 73 to 76 everything is appropriate? So that ambiguity you should not left in auditor's report. Next, moving, sixth clause, that is with respect to cost records. Again, the central government, or the reporting was as follows: the central government has prescribed maintenance of cost records under 148(1)(d) of the Companies Act. As explained to us, such records are at the advanced stage of preparation. Now, you yourself can make out by reading this that it is not appropriate. Not appropriate in the sense, the requirement of that particular clause is to report on whether those cost records are maintained, and cost records are adequately maintained and are appropriate. So again, in guidance note, a very long commentary is given on what do you mean by cost records and what are the auditor's responsibilities with respect to those cost records. It has also explained as to some fundamental concepts such as books of accounts and what are records and what are financial statements. To that extent, Institute has explained in the guidance note on CARO under that particular. However, in this case, sorry. Yeah, in fact, it is, when you give such sort of observations or opinions in your CARO, that CARO becomes an MR. So it is the other way around. To substantiate what management has said, you obtain MR. But if you keep giving these sorts of observations, then virtually that CARO becomes a part of MR, or sub part of that MR. And that overall dilutes, that dilutes the quality of audit, or that at least gives an impression that specific audit procedures which should have been performed are not performed, or even if they are performed, auditor is not saying with its authority that, okay, this is what the case is. These are the, in fact, the points of concerns so far as these all observations are there. So the observation of FRRB that as explained to us indicates that he has not examined the facts being reported. And on the contrary, he had simply relied on the explanation given by the management regarding maintenance of cost record, and appropriate audit procedures should be adopted by the auditor. At least in this case, one can ask for what cost records are maintained. Maybe you can have a brief discussion with the cost auditors. You can obtain cost audit report at least of previous year, right? So there has to be additional things that needs to be performed so long as opinion on that particular clause is concerned. But without taking any effort, if you simply say that as explained to us, this is what the case is, it may not serve good. Or even if you do it and still you say so, it will still not serve good, right? Okay, the clause 37A. Yes. So this is regarding the disputed, undisputed tax dues, etc. Now, the observation was, it was reported in one of the audit reports that according to information and explanation given to us, there are no dues relating to and various taxes, the sales tax, wealth tax, income tax, right? Now, in this case, maybe from financial statements, it was evident that that particular company was also liable to adhere to certain other laws or duties, such as maybe customs duty, excise duty. Those points were not specifically mentioned, and those were again included in that specific etc. part. So FRRB's view was, if at all you are mentioning all the acts, you should at least cover all the significant acts, because your customs, excise, all those duties would be definitely coming from revenue from operations. It is understood that maybe you are having factories in say different states, and so there were different states or maybe other local laws and other local levies, duties, taxes are there. You need not mention all those, but at least significant of those. I mean, these all would specifically relate to your revenue from operations, right? Or from operations. That should be mentioned it explicitly. The second case was companies regular in depositing with appropriate authorities undisputed statutory dues, including provident fund, employees, state insurance, etc. Now, this is again a very gross thing in the sense, in case of those financial statements, there was an outstanding appearing in financial statements so far as those PF dues, ESIC dues were concerned, and still that auditor friend has mentioned so in its CARO that companies regular in depositing those all taxes, the undisputed dues. So if those outstandings were there, at least then in the second subclause there should have been a clear table as to what were the disputes, and for those disputes, those taxes were, remained outstanding for more than 6 months, etc. Right? But that reporting was, I guess, missed in this case. Yeah. So again, this is that second part which we were saying about. So while reporting in pursuance of clause 37A, had reported an outstanding statutory dues in respect of various taxes, he has not reported the period to which such dues related to, right? So again, under CARO, under guidance note, it is specifically mentioned. These tables are given in guidance note also. So it has given that reference. So it has specifically asked us that if you are reporting on a particular subject matter, so far as that outstanding statutory dues are concerned, we have to give our report in a specified format where that nature of the statute, the due dates, the amount period for which it has remained outstanding, date of payment, if made, say after the 31st March, but before you issuing that audit report, those things need to be mentioned in that particular table. So if you simply miss on that and you simply say that outstanding statutory dues in respect of various other things, and you did not report on that, it is obviously liable to be picked for such observations. This is that clause B. So FRRB observed that the following observations, that in our opinion, that there are no material dues of duty of custom, service tax, excise, etc., which have not been deposited on account of dispute. And in this case, the usage of phrase no material dispute or no material dues gives an impression that auditor has verified and reported only the dues, those were material, but has not looked into, the other applicable dues which may not be falling in that materiality level, or which may not be going above the materiality level. Now, in case of CARO, because this is a factual reporting, you cannot apply materiality. Either that due is outstanding on account of disputes or not dispute. That needs to be, mentioned. I mean, all the dues that are outstanding on account of certain dispute, that needs to be mentioned. So there you cannot simply apply the materiality criteria, and you cannot say that only the material dues are explained below. I mean, in another case, the auditor has omitted to report the period to which disputed dues relates and forum where the dispute is pending. Again, this is a very common, expectation from CARO is concerned. Yes, yes, exactly. I mean, obviously, I mean, it may sound impractical, as you said, so that there may be many other dues which are of very insignificant amounts which are left. Or even in case of, say, income tax, we usually see that, okay, outstanding demand is paid for, so some 10 rupees, it is still appearing as outstanding, right? So that may so happen, but as of date, the facts are like this, that we have to report on all things. Possible, yeah. Okay. The ninth clause, now we are moving to. So again, observation was on account of, was like this, that while reporting under this clause, the auditor only reported regarding non-default of loans taken from government and dues to debenture holders. And in another case, auditor has reported the default and repayment of loan from certain banks without providing adequate details. So obviously, in first case, along with others, the auditor should have also reported with respect to dues to debenture holders. And in second case, auditor is required to give lender-wise details of defaults in repayment of loans from banks, financial institutions, and government authorities. Again, that format of reporting is prescribed under guidance note. Guidance note on CARO is pretty thorough, and it has given all significant guidances, also the practical aspects. Maybe what the best thing you can do is, that usually when I do before going to audit, you open that guidance note and simply find auditor should or auditor may, auditor need to. You simply find those things and you can have it highlighted, because that gives you, all the necessary actions that auditor has to do, right? You got my point? So you simply open that guidance note, it's in PDF. I understand that it runs into some hundreds of pages. You can simply select or find the words auditor should, right? That auditor should, and uske aage ka jitna bhi hai, that everything we need to do, basically. You can also take maybe auditor need to or auditor may, right? And that also you can maybe highlight in some different color. Okay. Okay, now we are moving to the 9C. That is pursuant to clause 39C, the auditor reported as follows: that company did not raise any money by way of initial public offer or further public offer and term loans during the year, and accordingly our comment in this clause is not required. Again, when you say that comment is not required, I mean, we are not the judge of the fact what is required or what is not required. Maximum you can state the fact that, okay, company has not raised any funds. Sorry. Yeah. Yes, it is. So it basically requires, by virtue of all the raising of fund activities that have done during the year. So for that, there is again a detailed guidance given in note, but that is included. Yes. So the auditor's report, it in fact uh, contradicts with financial statements, and financial statement disclose the proceeds from long-term borrowings in the cash flows. There are outstanding balances under note non-current borrowings, and basically here the auditor has missed. I mean, again, this was something an unavoidable error, you know, where auditor could have simply referred to the respective note and could have simply reported under the clause. In this case, he simply mentioned that company did not raise any funds. However, in cash flows under notes to accounts, there were many instances where such funds were. So this is 311A. So the again reporting was as follows: that according to information explanation given to us, no fraud on or by the company has been noticed or reported during the course of our audit. Now again, this particular clause requires to report all frauds. It doesn't give you any leeway or any, some exit way to report only those frauds that have happened during the course of audit or during the year. No. So So the auditor should have reported on all frauds noticed reported during the year rather than reporting only on the frauds that were noticed during the course of his audit. So basically, you cannot say that, okay, I did not find any fraud in the course of audit, so I did not report. No, it needs to be reported, the all frauds that have happened during the year or reported by the company or on the company. So again, this is something where maybe you can rely on the management representation. Maybe in that case, you can rely on, the legal scrutiny of your professional and other charges or the legal charges. From there, you can get to know various additional informations as to why a particular expense has gone up, gone down. Those other audit procedures would ultimately get you to, these conclusions. The last clause, probably the third clause, 313, the 13th clause. So the observation is as follows. So while reporting under this clause, the audit reported as follows: that as informed by the management, transactions with related parties are in compliance with 177, 188 of the Act where applicable, and details of such transactions have been disclosed in financial statements as required by the applicable accounting standards. Now here again, the phrase which was not taken in very good aspect or good spirit is as informed by the management, obviously, because it implies that auditor has not performed his part of duties. The second observation was auditor reported that since the company has not entered into related party transaction during the year, therefore the requirements of clause 313 are not applicable. So with regard to second case, reporting done by the auditor under clause 313 is not correct. Again, now why this is not correct? Because you cannot simply say that what is applicable or not applicable. So all clauses are obviously applicable. You have to state what is in that particular financial statement. You cannot say that it is not applicable just because there are no sort of transactions. Unless say like under 186.11, which we just saw, where that particular subsection is exempt to infrastructure companies, in that case, maybe one can make use of it, the phrase that it is not applicable. But in general cases, one cannot say simply that this particular clause altogether is not applicable while reporting. So these were, some of the observations which were pointed out and, compiled by FRRB for this particular session. And is it for the today's session? Maybe we can have some questions or. Exactly. I mean, that is in fact a very pertinent question. I mean, if you remember a few years ago, maybe a couple of years ago, there was a provision on NOCLAR and there was a lot of discussion on that. Maybe you can refer to that. See, as at present, SA 250 is what the guidance principle on that, which says that auditor need to first of all set his audit procedures in a manner to identify any suspected non-compliances with laws or regulations, or during the course of audit, whatever he comes across. So for that, basically our planning stage, how well you, plan for those risks and risks of material misstatements would play a part. Because in that case, see, the one basic thing one can generally or definitely do is you can have a complete legal scrutiny of legal and professional charges, or where, the lawyer's charges are paid. Based on that, maybe you can have some discussions initiated with your lawyers. Some discussions can also be initiated with other professionals or consultants. Maybe you can have an audit procedure of setting up a brief questionnaire of maybe 4 or 5 points. You can ask your company to prepare your own, a calendar or maybe a legal tracker sort of a thing. Yeah. So those other audit procedures we need to perform, and so long as SA 250 is concerned, that would be, the audit procedures that are required to be performed. Now, so long as various other laws and regulations are concerned, it may so happen that company being say even in case of a company having its factories in say different states, right, or even within states, it may be having different factories in say different zilhas or talukas. Over there, many local laws would apply, which may not be. I mean, we may not be aware of all those local laws. Under that case, there that phrase of that bloodhound and watchdog would in fact come, because our role is not to get into the investigative mode and say, oh, we are not doing the legal due diligence of that particular entity. But yes, whatever best possible things that you can do based on the records, that one needs to be in a position to perform, and one needs to be in position to demonstrate that okay, I've done these things. How can you demonstrate that? Obviously, while including it in your planning documentation, maybe in your risk assessment documentation. So over there, and of course the responses to those assessed risks. So based on that, you can identify and can showcase or can demonstrate that this is how that compliance of 250 has been made. So that is the best possible thing, right? Yeah. All right. Okay. So with that, we conclude the session for the day. Yeah. Yes, please. Thank you.